in the day, we spoke to Sridhar Sivaram of Enam Holdings, and he says that investors should look for opportunities beyond the top 15-20 stocks. And once again, he's betting on those financial companies with strong fundamentals whose stocks, according to him, will continue to perform well. Listen in to those recommendations.
If I just go back in the last 4 years and see all the tantrums that Trump has had with various countries, including North Korea and many of the others, they've had limited impact as far as the markets are concerned, because none of them actually really escalated. Keep in mind that this is an election year for the US markets. They can't afford too many large negative news. So I would assume that these are the normal tantrums that you see just before election as far as US is concerned. We've seen this playbook before also. Markets reflecting a different story as far as the top 20 stocks are concerned. And you look at the broader market, many of them are, say, so we were looking at, the overall, say, 2,000-3,000 stocks that broadly trade. I think more than 50% of the stocks are down 60-65% from their peak. We may not see significant correction unless there is a bad news or significant bad news in many of them. If not, they could just see a time correction, and it could be that some of the the leaders for the next rally may be something completely different, maybe some other sector, maybe some other group of stocks. So it need not be the same. That's a broad view, that if something has worked for the last 4-5 years.
Okay, so that's, of course, Sridhar Sivaram giving his, crystal ball gazing readings to ET now. Okay, well, here's one interesting piece of news that will impact almost all of us because it's with respect to term insurance, the most basic, plain vanilla life insurance product that I think almost all of us have. And if we don't have, then what are you waiting for? Go buy it right now. However, there's a piece of not so great news, and that is the prices of term insurance may increase. Let's bring on board Santosh Agarwal, Chief Business Officer for Life Insurance with PolicyBazaar.com. Santosh, thanks so much for joining us on The Money Show. So how does pricing in term insurance work? First, let's start off with that, and then I can ask you about what exactly has happened that's caused the changes in pricing.
See, basically, the cost of term insurance is determined by, say, the mortality experience, right? And the experience is gathered over a period of time, and based on the experience, there's a table that is formed. It's called an ILM table that kind of predicts at what age, what percentage of people in India would die. And basis that, basis that experience, and then some costs that get added to the cost of building a product, and some profitability that the insurance company will kind of want to make from that book. So the profit margin, the cost, and the mortality experience, which is 80% of the cost, is added to arrive at a term insurance price. That's how the cost of a term insurance product is determined largely.
Okay, so what exactly has changed in these mortality assumptions, or what is the reason why term insurance prices will increase?
Basically, what the industry follows is a table of 2006 and 2008, which is a table which is based on LIC's mortality experience of the last 50 years. And that's representative of general Indian population, because LIC caters to every small town, city, and a lot of suburban urban population as well. So that's reflective of general Indian population. Now, when insurance companies bring out a term insurance product, they're far more aggressive in taking the mortality assumption. For example, they take an assumption that if LIC is quoting, so if 100 is the base rate, they say that out of 100, actually the real experience will be only 1/4 of the people will die, because they're catering to our urban population, a more affluent population, and affluence will indicate better healthcare access, better income to take care of yourself, and hence better longevity. So they discount the LIC table to arrive at their own assumption, which may be 1/3 when it comes to offline and 1/4 when it comes to online, depending on the affluence of the target population. And basis that, they arrive at a price of term insurance. Now this industry is very nascent, and it's been formed in the last largely 5-6 years. Now what's happening is, basis the data of the last 5-6 years that's coming together, and when the reinsurance company is kind of looking at this data and combining it for all insurance companies that it kind of caters to, it's seeing that these assumptions were far more aggressive than what's actually happening in real life. So maybe the assumptions were a little, I think, overboard, and what they're seeing is that the real experience is a little worse off. Now, if this is again very early trend, but this trend is indicative because they're looking at data in aggregate and large volumes of data, which means that finally what the outcome of this is going to be that either the insurance company will have to decrease its margin, or the price of term insurance contract for the customer is going to increase. Now, the insurance company will have to take a call which path to take. Now, as term insurance is mostly, for insurance companies, one of the most profitable book, and taking margin hit on that may not be long-term sustainable. So ultimately, what's going to happen is the price for the customer is going to increase, and this may play out in the next 3 months to the next, say, 18 months or so.
So what about the current term insurance plans that I may have bought or our viewers may have bought? What is the status of that right now then?
Once you've bought a life insurance contract, that contract remains sacrosanct for the number of years you bought it for. So that doesn't change. Any product that you may have bought in the past, whatever premium you've committed to, the premium remains constant for the entire period that you bought the plan for. This will be applicable for any new purchase once the prices are revised. So it's only going to affect people buying in the future. People who've already bought will keep continuing paying the same premium that they bought it for.
So how soon did you mention that the price increase will kick in? I mean, essentially to give our viewers a sense that how long do they have before, to buy a term insurance before they'll have to start paying the higher rates?
So the reinsurer is one large key reinsurer in India who sent out notices to all its portfolio companies, and they have a notice of 90 days since they sent out the notice. The notice was sent out somewhere in the month of mid-December. So by mid-March or end of March, I think next fiscal April, you should see a term price going up.
So before April, you need to ensure you buy a term insurance or you'll have to pay the higher prices. What about online, Santosh? Because, usually online prices are cheaper. So what exactly will happen post these new prices kicking in? I mean, will online still be cheaper? How will it be?
So there's a price differential between online and offline today, and online is cheaper than offline. But there'll be a shift in prices of both online and offline, and the differential may remain the same. So if, say, online today is, say, 10% cheaper, it may continue to remain 10% cheaper, but the prices for both online and offline will increase. So the difference between the two, the margin may remain the same, but prices for both will go up. But online will continue to remain cheaper than offline for the sheer reason that online only caters to a far more digital savvy affluent set. And hence the mortality assumption for online is much better than an offline.
On average, what's the pricing difference? Yes, I got what you're saying, that if the online policy is catering to more affluent set of citizens, so perhaps the life expectancy or the mortality rates as well will be a bit lower. What's the average price difference between online and offline life insurance purchased?
Depending again on the insurance company kind of offering it, there are differences of as high as 30% to as low as 5%. So the margin difference could be 5% or as high as 30%.
Santosh, when you tell me that an online insurance policy, a term insurance policy,
and this is each year.
Okay, all right. So, Santosh, when you tell me that an online insurance policy, one that I buy online, is going to be cheaper than an offline one, then why isn't it just an obvious choice that, I'm just going to purchase it online? I'm specifically speaking about those individuals who, of course, have internet access, which I think many of us do have now. But yeah, why wouldn't I just simply choose an online policy plan when it is cheaper? Is there any sort of advantage to an offline plan versus an online one?
There is no specific advantage. The product is exactly the same. The insurance company offering it is exactly the same. The features, everything is the same, right? It's the same company, it's the same product, it's the same brand, it's the same features. So eventually everything is the same. I think it's a sheer comfort of the individual customer. He may find online purchase may not be used to digital buying process, because a digital buying process will mean you going online, doing a lot of it yourself, filling out the proposal form, and you may not be used to doing it. Is as simple as that. Offline, an agent can come to you, or you could go to the bank, and somebody may help you fill out the form. But I would kind of advise against doing that, because something like a life insurance, which is very I think core to your financial need, should be dealt with in I think great seriousness. And if you fill out the form yourself, the chances of the claim getting honored is far higher, right? Because there'll be higher level of disclosure, and you'll fill the form with highest utmost honesty. So there's no need for the company to reject a claim. So I think paying some attention and doing it yourself, maybe a little cumbersome when you do it, but it's just 10 minutes maybe of extra time, and it saves you a lot of money. So I think online should be the way to do it, but again, it's an individual call.
Okay, all right. So that's Santosh's recommendation on how you should go about buying that term insurance plan. It's extremely vital you understand it, and like she mentioned, you have till April, and then you'll of course have the new rates that will kick in. Santosh, since I have you, I also want to talk to you about a recent ruling by the Consumer Court to LIC, where they did say that the insurance claim cannot be denied on the ground of common lifestyle disease. In this case, it was a diabetes. Now, a lot of our viewers sometimes call us at the age of 40 and 50 saying that, I have XYZ disease. Should I buy a term plan? Will it be more expensive? So how does it work? I mean, do you have to disclose your lifestyle, any, genetic diseases that, you may be having when you buy that term insurance?
Ideally, the answer is yes. Whatever pre-existing disease that you have, when you're buying the term insurance policy, you should disclose those facts, because they kind of determine the price, right? The price for a diabetic will be different from a person, from a regular individual, for a healthy individual. And if you kind of hide this fact, and once at the time of claim, it gets known that you were diabetic when you bought the product, that means in a way you've kind of gotten away with a discount which you shouldn't have, and the insurance company will see it as non-disclosure and does have the right to deny your claim. So the idea, I think, here is that insurance is a contract of utmost good faith, essentially, right? So full disclosure at the time of buying will basically mean just 100% claim when it comes to it. And when you're buying something like term insurance, which basically for peace of mind of yourself and of your family, anyway the gift get, right, is just too good to kind of make it more efficient. So if you pay, say, 10,000 rupees premium for 1 crore cover, if something were to happen to you, a family will get 1 crore for which is 10,000 rupees that you've paid. So I don't think trying to make that equation more efficient is not the right thing to do. And just full disclosure means your family will definitely get the claim, and that's how one should do it.
Okay, all right, Santosh, thanks so much for joining in then on that important piece of news. Like I said, you have till April. Go buy the term insurance. It's an extremely critical part of your overall financial plan. And if you still are lazy, well, you're going to just lose a little more money. Thanks, Santosh, for joining in.